Gold and silver have both been making headlines all around the world on Kitco News, on mainstream media. Everyone's talking about the surge, here to talk about what to expect going forward. Gary Wagner, editor of thegoldforecast.com. Gary, welcome back.
It's great to be here. Thank you.
This surge has caught a lot of people by surprise in terms of how fast the prices have gone up. Silver, since last we spoke in June, mid-June, silver has climbed over the last 5 weeks, 27%. Gold is up 8%. So my first question is, the gold-silver ratio has truncated as a result. Were you surprised at how differently these two metals have rallied?
In one degree, absolutely. In another degree, not so much. Silver tends to outperform gold if it's in rally mode in terms of a percentage gain. The reciprocal is also true. When the markets correct, silver tends to correct much harder in terms of percentages. Now, we've seen a real narrowing of the gold-silver ratio from about 102 to about 83. And what that tells everyone is that they're actively buying silver with such a frenzy right now. It is outperforming gold in terms of volume and the amounts that are being bought. The reason I believe that might be, one, there's some talk about scarcity, but two, the millennials, people that have put money into the U.S. equities markets that are in their 30s and 40s, realize they need a safe haven asset in case there is a bubble. And so for that reason, I think they feel a little bit more comfortable with silver. It's easier to accumulate.
But why is silver filling up that role as a safe haven asset? Is it something that you would expect from the white metal, as people would call it? People call it the poor man's gold. Would you attribute any sort of substance to that term?
Well, I mean, silver is a unique metal in that it's one of the hardest ones to actually mold. But the thing about silver itself is that it has the ability to be a precious metal and at the same time is highly used in the industry. So it has both components going. So when you have equities and precious metals running in tandem to the upside, silver can outperform gold because it is needed for the industrial side, and it is still a safe haven asset. Always has been, I believe it always will be. When you look back historically, there were gold coins and silver coins, and you can go back hundreds of years. Those were the two primary metals that civilization believed had intrinsic value, and that carries on throughout today.
I'm glad you brought up the industrial component, Gary, because usually when we think about a silver price rally, we also think about a proportional response in industrial growth. But we're still in a recession. So where is this industrial growth coming from that's driving up silver demand?
I would have to say the recovery of the pandemic right now and the economic fallout that's going to follow is going to lag behind these moves in the precious metals, specifically silver. And you speak about the last 5 weeks. What's most impressive to me is when you consider that back in March, just a few months ago, it broke below $12 per ounce. It is currently trading today at $23 per ounce. It has basically doubled in a couple of months, and that's huge. That's absolutely a parabolic move up. Right now, it broke through a key level, which to me was 2116. These are Fibonacci-based numbers. The next real number for resistance comes in at 2794, $28 per ounce. So I think we still have room to the upside. I think as long as we see gold rallying, silver will rally with it. And I also believe that there will be a disparity between the percentage gains of gold and silver. The disparity is widened to a degree that we haven't seen in a while. In fact, I don't ever remember seeing it with that kind of disparity, but it has existed before and it continues to.
So Gary, you hit the nail on the head here. If silver has outperformed the industrial growth aspect, which is one of the fundamental drivers of the metal, as you had mentioned, aren't you concerned that investors may have pushed this up beyond what it really should be?
That's highly possible. And whenever you get a market that overheats and moves up too quickly or down too quickly, it definitely has to have some sort of a compensation. And so what we're seeing now is kind of a knee-jerk reaction to the fact that I believe the world at large believed that this pandemic would be resolved or at least contained within the first 2 or 3 months. I think we're in month 4 or month 5 right now. We've got hotspots all over the United States. Brazil is the second largest. So whether you want to call it a second wave, we still have the pandemic in full force. Even President Trump came out yesterday, and it was an odd statement from him saying he thinks it's going to get worse before it gets better. And that's Mr. Optimistic. He always says, things are great. So for him to say that tells me that we've got a much longer timeline in terms of ending the pandemic. But that's part one. Part two is the massive amounts of economic stimulus and fiscal stimulus that were needed globally to A, help out those who needed money out of work, and B, to reignite the economy, to infuse it with capital. And the thing is, when you do that with every currency, and gold and silver are paired against those currencies, it's almost a given that it will go, those two metals will go higher.
How much of this rally was driven by generalist investors who are new to the space and who are just chasing momentum?
If you look at the COT, the COT, the Commitment of Traders report, even though it lags behind a week, what I have been noticing over the last 3 reports are massive buildups of long positions by money managers and hedge funds. So these aren't the individuals going in and speculating. Yes, they're there, but institutional buying of gold and silver accounts for a great percentage of the activity that we're currently seeing. That, coupled with central banks buying gold, they haven't bought as much as they did last year, but they're actively buying gold also. So I think that those are key drivers, and the speculators are the one that they add fuel to the fire, so to speak.
Gary, I'm just putting myself in the shoes of a fund manager here. If I were an institutional investor and I'm buying a lot of gold right now, I'm probably anticipating some sort of correction in the markets or some sort of economic fallout that I need to be prepared for, but that's already happened. So it doesn't make sense to me that institutional investors are buying things 3 months late. There must be another reason for why they're stockpiling gold and silver now.
Well, when you say that that's already happened, it matters how we qualify it. We have not even begun to feel the economic fallout that will follow the pandemic when it concludes, and people tally up all of the massive expenditures, the money that's been outlaid by governments. That's got to come back somehow. The GDP itself has been contracting. Right now, we've got a budget deficit that is just out of control. So these things, A, are inflationary, so you're getting some push from that. But the fact of the matter is, whenever the central banks, or specifically the Federal Reserve, does quantitative easing as their primary monetary policy besides low interest rates, they are accumulating massive amounts of mortgage-backed securities, treasuries, and on this occasion, even corporate bonds. And some of them are not that strong. In other words, they're creating the liquidity and basically printing money. Then the Treasury Department actually allocated another $3 trillion, which was voted on by the House and Congress in aid packages, the CARE Act. Very common used to say there's no such thing as a free lunch. And I get a lot of pushback when I say we're going to have to pay the bill at some point, because the type of economic philosophy that has been around since World War II ended, which is spend more than you have in your reserves, it's a new way. Because if you look back in history, gold and silver were the primary monetary exchange things that you used to barter. And if you didn't have enough to pay your troops, you raided the village next to you, took their gold, and then paid it. But you couldn't write IOUs on a piece of paper. That all changed really after the war in the Bretton Woods Act, when they took gold, made it attached to the dollar, and let other countries convert US dollars into gold. Of course, Nixon ended that in 71, and that's when we really started seeing gold go from nominal prices to astronomical prices.
So it sounds to me like, Gary, that you anticipate more economic trouble ahead. Is that correct to say?
I have to say, we have some brilliant people that are running the Fed, but when you spend that much money and allocate that kind of capital, somehow you've got to reel it back in at some point. And think about this. In 2008, the financial crisis, they swelled the asset balance sheet up to $4.5 trillion. Then they had a period in which they began to liquidate. They wanted to unroll those things, but they couldn't go past 3.7 trillion because less than that dried the money supply up. So they're caught between a rock and a hard place in that they're almost forced to hold and continue to do business in that way until the GDP is really running on 8 cylinders. And I don't believe that it is. In America, you still have many states that are in either virtual lockdowns, restaurants aren't open, things like that. That includes Hawaii. And even after the pandemic subsides, and we all know that it will, now we've got 30 million Americans that have to go back to work. That's 1 out of 10. So that's going to be a slow process of having the people that got laid off go back. And that's going to be a lot of pain for individuals. Therefore, they're going to probably pass some sort of a stimulus act to help them out. In other words, I don't believe it's going to end soon. And once we have a vaccine, at that point, we'll begin to feel the fallout. And I think the fallout will take multiple years to really run a course.
We've talked about silver. Let's move on to gold now. Last time you were on the show, mid-June, you called for $1,800 an ounce by third or fourth quarter. We've obviously hit that level, but much sooner than you had anticipated. And, I want to know what your reaction was when you first saw that $1,800 level.
I was pleased as punch because that's what I was waiting for. It did occur much sooner than I thought it would. And in fact, I have been updating numbers over the last week because my numbers for silver were $21.50. It's at $23. And I mean, today alone, it moved up 7%, 6% yesterday. Granted, they're not double-digit moves in terms of percentages, but they're huge moves for silver. And so we've seen it run to $50 before. My sentiment is, and my question that I don't have an answer to, is I truly believe that gold is going to challenge and take out the old record high. In fact, if you look at other currencies, they're already at all record highs, such as the euro, the Canadian dollar, Russian currency, except for maybe the Swiss and I think the yen. All the currencies have gold at an all-time high. Mm-hmm. So the question becomes, if gold, and I believe it's not if but when, which is what I said about 1800. I said it's not if we see 18, it's when. I believe we will overtake 1920. It's not if but when. And the question becomes, will silver run back to $40 or $50 as it did during that time cycle back in 2011?
We're going to show the viewers two charts now. The two charts that you put together, the gold weekly chart, which is the first one, and the second one is your gold projection chart. Let's start with the first one. How are you reading this chart? What happened this week?
Well, I mean, this week we really saw gold shoot up. It really began Tuesday, July the 7th. That was the first day we saw gold break and close above 1,800. It then moved to about 1,810 on the following day, and then it consolidated for a while, and then it spiked up again. What I have noticed with gold, and it's a very, very good sign to me, is that it has been moving to higher pricing in a very, very orderly manner. In other words, it tends to trade sideways or consolidates for a period of time, and it spikes to a new higher price. Once it hits that higher price, Rather than having a major correction, it kind of trades sideways again. So we've seen these stair steps. Now we're on a stair step where we've got gold trading up a tremendous amount. Let me see where we're at. And this is basis August 1870. Oh, that's October. 1877 in October, and 1866 is the current price of August futures. That is not that far away from 1920. It's absolutely in striking distance. So I definitely think we'll see gold ascend above the old record high and make a new one. And the reason I believe it's inevitable is last time when there was quantitative easing, it moved the gold market substantially higher. Now, if we get the equities and the metals running in tandem, and then the equities break for a correction, gold and silver could take off to new prices we have not seen before.
Your projection chart obviously shows gold going much higher, as you just explained. You've also written about the 1-2 punch. Talk to us about what that is and how that relates to your thesis of gold climbing higher.
Okay. Well, first to the 1-2 punch. We've covered kind of bits and pieces throughout this interview, but basically the first part of that 1-2 punch is dollar weakness. The dollar has come down tremendously over the last month and a half. Really, when you look at the highs up at around 103, that was about 3 to 6 months ago, it's come down 10, 15%. As it comes down, gold has to go up. So that's the first punch. The second punch is, as that's happening, actions by the Federal Reserve are causing the dollar to continue to devalue. And then that second part of the punch was this renewed tension between the United States and China. Now they're fighting over accusations that there has been intellectual theft. I have no idea. I'm not privy to how true that is, but that's a major concern. And so that has definitely ruffled the feathers of the administration here, as well as the powers that be in China. And so those collectively, to me, are the 1-2 punch. Now, in terms of the actual forecast on that chart, I'm using two basic techniques. The first technique is basically Elliott wave theory, and then the second technique is Fibonacci extension. And the rule of thumb is that when we have a wave count, it will go 1, 2, 3, 4, 5, where 1, 3, and 5 are called motive waves or impulse waves moving in the direction of the primary trend, which is up. Waves 2 and 4 are corrective waves. And so what tends to happen is when you have a completion of a third wave and then you get the correction, so that fourth wave is ended, you do an extension of 0.618, and that will give you a target to where you think the market will go at the conclusion of the fifth wave. Our forecast is for 2000 plus, I think it was 2033 is what we feel is realistic when this rally is over.
Last question, Gary. You're based in Hawaii, where tourism is a huge component of the economy. Have you personally noticed any recovery on this front?
Quite the opposite. Quite the opposite. When I go into town, I meet on business maybe a couple of times a month. Waikiki, which used to be just tourist city, the streets were crowded, everybody was shopping, people were spending money. It is like a ghost town. The fact of the matter is they will let individuals into Hawaii from other parts, but you either have to A, prove that you don't have COVID-19, and B, if you can't prove it, you have to quarantine yourself for 2 weeks. No individual is going to come on vacation and then spend 2 weeks in their hotel room. And so many of the hotels are closed. So we haven't seen that whatsoever. In fact, in the last 5 months, I've sat at a sit-down restaurant on one occasion, and it felt different. But no, we don't see it returning. It will in a month or so, but there's going to be deep scars because of that. And the travel industry, airlines, hotels, and whatnot, they're facing huge crises because they are burning cash very, very quickly, and they're not taking anything in. So hopefully that will change.
Well, I hope you stay safe, Gary, and I appreciate you taking the time to speak with me today. Thank you very much.
Thank you very much. Always a pleasure to speak with you, and look forward to seeing what gold and silver do over the next month.
As are we all. Kitco News, David Lynn reporting. Thank you for watching. Stay tuned.